What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 18th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's update, we've got a wide range of topics to discuss. We're obviously going to start off by taking a look at crypto markets, diving into Bitcoin, and also taking a fan request in the sense of analyzing the top 3 picks and the market that I have for 2020. And outside of that, we've also got some key news topics. We got to talk about the growing slowdown in China, along with that as well, what's going on in the housing market, predominantly in Nashville here in the United States, and outside of that as well, taking another fan request and talking about Tesla and its dominance in the electric car market. Will it be able to sustain itself? Well, we're going to go ahead and talk about all those things as we go throughout the video. So let's go ahead and start off by taking a look over crypto markets. All right, so over the last 24 hours here, we can see that most cryptocurrencies are in bearish territory at the moment. Again, most plays not moving too far out of the 1 to 2% to the upside or downside that we look for to call it neutral territory, but we are seeing more point to the downside, especially some of the larger players. Now, let's go ahead here, take a look at the global charts here. We can see market cap on the overall has been declining about near $10 billion over the last week. This is mainly due to Bitcoin correcting after its recent bump up in price. We have seen altcoins holding generally steadily here, only losing about $2 billion from the relative peak here at $75 billion. So nothing too stark. Again, continuing to hold a higher level of dominance here. Well, Bitcoin's actually holding the majority of dominance. But again, what I mean by that is that we're still seeing altcoins holding the dominance gains that they've made over the last few weeks. This is coming from all across the board, from plays like XRP, Ethereum, and other coins. But XRP seems to, I have to be fair, has been really making more of the steady uptrend here. All right, so we'll go ahead and talk about Bitcoin. I'll be fair, guys. I would love to do some analysis on Bitcoin here. There's not much I can say. There's a few things I'm going to be looking for here. On the daily time frame, for my 3 indicators, as much as I like to use the weekly, for a little bit of a short-term analysis, I do like how the squeeze momentum indicator has gotten back up towards neutral territory and looks like it might start closing higher here. For example, the MACD had a cross back here the other day as we started to get a little bit of an uptick in price. I would like to see the blue line hold on the orange line and continue higher, growing the divergence between the 2 moving averages on the MACD. And I'd also like to see the stochastic RSI pop up back into this upper range. But I just don't know if we're going to get it yet. We might be set for lower levels. I'm not making any calls either way. But again, as I've talked to you guys about in previous videos, my major play here for any ads into Bitcoin, I'm not trying to trade Bitcoin at the moment. I'm looking to add any time I have cash on the side and there's more than a 40% correction in this case, usually even a 35 to 40% correction, hence why I started to add at some of these lows up here. And I'll happily add down in this range as well, because my position is not for the short term. It is for the greater cycle to anywhere from 50 to 100,000. Okay, so we got a wide range there, but I think that's what we're going to get sometime in late 2021 to possibly 2022. So it's going to take us some time to get there. Anyways, that's my general play there. I'm more focused on the shift we've been seeing in the altcoin market. And again, as it hasn't had much of a shift since we last talked, we're still seeing the general downtrend play out here. There's nothing that's convinced me so far that this trend is breaking. More than anything, I want to see over the next few days that we're going to close below this general range here. Sorry, actually it's down over this range at 66.5, the previous low here. And once we do that, I think momentum really starts to set in. But again, could take up to a week here. Not making any crazy calls or anything. Just right now, I know where I'm positioned. And so far, my altcoin positions have been leading at the forefront of this gain in dominance. A lot of them are mid caps that have been leading the market. And we'll go ahead and talk about some of those real quick, right? I have to say, guys, I no doubt, as we were entering into the bear market last year, we made some wrong calls in the sense of thinking that 6K would hold and, we were very kind of not so I think we weren't crazy eager in this case to make any serious ads as we were starting to break up from a very fast, from 3 to 4,000 all the way to 6 and 7,000. I thought we'd hit some resistance. So I didn't do too well on calling Bitcoin calls back in 2018 and the early part of 2019. What we have done good so far is really calling the shift of altcoin dominance here. And you can see it in our plays here that we've been watching. We've been looking for strength. I know it's very eager for most people to want to buy things that are cheap, but that doesn't tend to be what wins out in the long term. There's a reason people have been buying during a bear market on these specific assets, because there's some of the few altcoin projects that actually seem to offer something interesting, at least from what I can see. I know I won't mention probably your favorite altcoin project. That's not an insult to your guys' project. It's just that we all have different perspectives in this case, but I really try to look for things that show the same symptoms of previous projects, so the same kind of traits. I guess symptoms makes it sound bad, but the same kind of traits that have been successful in some of the major projects like Ethereum, right? And one of those is Chainlink, which is serving as a middleware solution. Now, I know some of you out there, this is actually another fan question. I think it'd be good to talk about it while we're here. And I probably will not be able to do it justice in explaining. I have to probably do a more full-depth video. We did do our altcoin video, our top 10 altcoins for 2020. And I did talk, I think, a little bit about this if I recall correctly. But either way, some people were curious about what the benefit is of holding Chainlink, right? Like, what's the utility model for the token in this case for what it's servicing? Well, first off, it's important to understand what Chainlink does. It serves as a middleware solution to gather real-world information to interact with smart contracts. So the problem with Ethereum and any blockchain with smart contracts is that they can only really communicate on chain, right? The thing about smart contracts is they're not so smart in the way that they can't really, know what's happening in the real world, right? It's kind of siloed in a sense. So we have to use a middleware solution like Chainlink and Oracle to be able to provide information to those smart contracts. Now, the way that an Oracle works is that an Oracle is going to have to be a trusted outside actor of some sort, a data source that is going to input information into the smart contract as time progresses when variables change so that certain transactions can happen. A way to think about this is that if you and I were to, for example, say I'll send you $1,000 worth of Bitcoin once you send me $1,000 in a Swift payment. I know it's not the most lucrative or interesting use case. In that matter, what would happen is that once the payment has been made on Swift, the Oracle would send a transaction or a bit of information to the smart contract. In this case, thereby sending the Bitcoin to the other address in this case, right? So again, the smart contract is automated. We could do it on Rootstock or whatever platform we want to use for smart contracts on Bitcoin. Again, it's probably going to be mostly used on Ethereum for the most part, but we'll see over time. I would like to see it used on Bitcoin and other networks. But the fact of the matter is that's what Chainlink is for. Now, how does the token get its demand? The token gets its demand from the oracles having to stake Chainlink in this case, right? So in order to have authority, you need to have backed up collateral to be able to have the authority to verify information. That's the whole idea. If you lie, if you cheat in that sense on providing false information, you can lose your stake. That's the whole kind of idea. It's very similar to masternodes on the Dash network in this case. If they were to try to corrupt the network, provide a false transaction, if they get detected on providing that false transaction, they can lose their stake. So that's the whole kind of idea. It's something at stake in order to provide truthful information, right? So just something to provide out there for you guys. Just wanted to explain that. We're really, again, just trying to answer as many questions as I can in the comments. Anyways, for those of you who don't really care about that, I'm sorry if I rambled on for a little while about that. Let's talk about the TA here. I love seeing how Chainlink, after I think was around a little bit over a 20% correction from the top of the wicks. Yes, we got about a 23.8% correction, near 24%. Again, anything around 20% in this case on some of my favorite altcoins that are this momentous, for them to hold and then return back up over the next few days really excites me. Now, we're still seeing a lot of the indicators here on the daily aren't a full-on confidence sign for me to go all in just yet, but I do like the daily momentum against Bitcoin. Not to mention, as I told you guys, I usually look at the weekly, and the weekly is still pointing up in this case. All three indicators check out here, right? So I think very soon we're going to pass this range here. Probably not this week, but over the next few weeks as we continue to see a growth in altcoin dominance. I really think Chainlink is going to be one of the ones to steal the show. But again, it's just because everything so far has been checking out. It's been one of the best performers in 2018 as well as in 2019. So again, this is what interests me. The fact that over the last 2 years, right, we've been seeing this insane growth against Bitcoin in a bear market. And now as we're exiting out of it, we're still seeing that same resurgence momentum come pretty much more than we've ever seen it, right? Not to mention at a much larger scale as the market cap grows. So I like that. Again, that's just my thesis on it, guys. You guys can have a completely different opinion, and I'd like to know about it. If you don't agree with me, if you think it's not a good project, feel free to leave a comment down below. I always love hearing from you guys. All right, so let's go ahead and take a look at this on Bittrex. This is going to give us a much more clear view. So we're taking a look at Ravencoin here. This is our third pick, right? And the major thing that I like to see is that over the long term here, again, as I talked about, as we're looking for some of the better plays over the next few years, right? Now you already know, if you guys don't know what Ravencoin's about, I'd recommend you go watch my top 10 coin video. I don't want to spend too much time talking about these projects, but it's basically a platform for creating a digital form of assets in this case, and it can resemble real world assets as well, but basically a platform for all kinds of things, from ranging from digitizing physical, real world assets, NFTs, and then also things like securities, hopefully in the future. And Ravencoin is one of the interesting proof of work projects that are out there at the moment. So as you can see, we've had some really big breakout cycles here for Ravencoin in the past. I'm shrinking the chart here, but you can see here that we've been setting consistently higher lows since all the way back here in September 2018, when it really first started trading on liquid exchanges. So this pattern to me looks really exciting. I like that. I like the fact that it's had parabolic runs in the past. It's what it definitely interests me in the sense of making more shorter term positions. But again, this is going to be one of my longer term plays for the next cycle. Outside of that as well, the project itself does actually have a lot of interesting potential as well, hence why I think the only real succeeders in this market are going to be ones that provide some sense of real value in the long term. So again, Ravencoin looks good here. My major thing that I take into mind is that we've been setting higher lows and higher highs. So this really might mean that we could see somewhere near a little bit under a 10x for Ravencoin over this next cycle. I don't know how quick it's going to come, or if it's going to be more of a long-term rally. From what I can see, it seems like this is going to be a little more of a sustainable rally as we go into the next few months and over the next year. And the thing I like too as well is that as it's corrected, so far it's holding on generally the resistance range that it was holding for a while, anywhere between I think it's more, I would say probably around 380 to 400 Satoshis if you were to take a look at these previous resistance points before we had the breakout. It's good to make previous resistance support before you continue higher, right? This shows that it's a much more healthy cycle than these kind of speculative waves. I'll go ahead and put it on the auto chart so you see it a little clearer. As you can see, are these very big parabolic run-ups. So to me, that looks quite nice, and this would be at the range where I personally would add. So I've been thinking about adding some Ravencoin if I do run in some cash positions over the next few days. All right, last but not least, BAT. And I just want to clarify as well, I do not own any Ravencoin. All right, I don't want to make it sound like I own any just yet, but I have looked at it. The two ones that I've really been exposed to have been Basic Attention Token and Chainlink. Okay, those have really been my top two plays. Now, in the sense of BAT here, this is starting to get towards a point where I think we could hit some resistance at this mark, and if anything, we're going to hit it up here at 3,300 sats. So again, as I mentioned the other day, I took a partial share, a little too premature, I think, in the sense of the potential it had. I think I closed out when we hit back up against this candle right here. So again, these are the two marks I would look for to maybe start taking partial shares. Just for me personally, that would be my strategy about going on it. But again, you got to determine for yourself. But overall, I think once we get past these two markings, there's really not going to be any significant resistance, and we're going to start going into the next cycle, as we've seen, going through these kind of parabolic run-ups. So if you're trading for more the longer-term trend here, and you don't want to try risking, trading it around down here, don't stress about it. Again, you can take either strategy. You got to determine what's best for you guys, right? And that's really what I'm majorly playing for, but there are some opportunities in this case swinging between some of my favorite plays that have actually been able to yield a higher Bitcoin comparative in this case by doing so. So I've been very fortunate in that case. All right, so we've talked enough about the top three picks. I hope that provided some clarity for you guys. I want to go ahead and talk a little bit about some traditional market news, and then we'll go ahead and towards talking about the electric vehicle market. So China's economy is definitely slowing down in the sense of its national growth. We know that China has been the powerhouse of the world, growing anywhere between 6 to 8% over the last few years on an annual basis. Again, continuing to rapidly expand its economy and continuing to maintain the growth that it had already made over the last few decades. And now we're finally starting to see that, lo and behold, surprise, surprise, things can't grow forever. And I don't even want to, dive into more of the critical stuff I'm going to mention here in a moment, right? Economies have to grow at a slower rate, right? And when you double or triple the size of an economy, it's going to be much more difficult to get those same 6 to 8% growth numbers, because if you're running with an economy that's 3 times larger, you can probably do the math there. It is going to be much larger growth in that case if you're maintaining 6 to 8%, right? Because you're not growing 6 to 8% on a $100 billion economy. If you've tripled that, you're doing it on a $300 billion economy. So Just using that as an analogy. I don't have all the numbers of the exact growth numbers of China. It's, of course, much bigger than 100 to 300 billion. But, it's just an analogy, guys. I'm not trying to be too specific. But anyways, so we're seeing that investor growth is weaker than expected at around 5.4%. So we're not just seeing a slowdown in GDP. We're not just seeing a slowdown in auto manufacturer sales, probably property purchases in China. We are also now seeing a decline in this case of investor confidence in China. We're not seeing as many individuals investing in the Chinese market. So let's go ahead and talk about, what this means. I think it's very clear that after more than 11 years, we are finally getting to the point where the economy globally is entering into the early warning signs of a recession. And this isn't something, again, to be extensively critical in China, but I will say they have been able to, much like the States and a few other areas of the world, prolong this inevitable slowdown in the economy, this inevitable recession, because they've been continuously using all the tools they have available to them. They had the largest, at the beginning of this year, between January and February, had the largest credit injection into the Chinese economy in history. And when you have to start using tools like that, when you're really starting to devalue your own currency, as we've seen with the Chinese yuan, again, it's showing the desperation. It's showing the later phase of the cycle here for China. And again, I think this is absolutely needed and healthy. There's a lot of problems in China. The ghost cities, where they've basically seen property developments that have no one living in them, but they're still priced at ridiculous levels. I mean, as we just seen across the board on assets are treated like toys at this point. They're just ways to store wealth and, basically, in a sense, like a bubble, try to get in first and get out, all right? And it's inevitably going to end quite bad, I think, because it's been prolonged like this. And the more China does this, the more it's going to wreck their economy, not to mention they're in the middle of a trade war with the States. So, again, I think that right now, I have an interest in, there are some interesting Chinese stocks that have looked at some ADRs, but with the tension of the trade war, not to mention as well, the fact that China is definitely due for a pretty strict correction, I don't have any eagerness to buy equities in general, but especially Chinese equities at the moment. All right. Now, as we're talking about properties as well, as we kind of alluded to, and the kind of bubble that China has built in its real estate market, Nashville, one of the cities here in the United States in the great state of Tennessee, has seen continuing growth and demand for its properties, but not to mention as well a declining amount of space in those properties, what your money will buy for you. And this is something that a lot of people inevitably give into when it comes to wanting to live in desirable cities. So Nashville is a very awesome city. I've been to it a few times. People there are lovely, very kind. But the thing is, it's just like simply with San Francisco and Boston, New York City, any city you can think of. It doesn't matter if it's in the north, it's in the south, whatever it is, you are going to have to deal with the issue of getting less and paying more. And it's not a fun trend. But to give you some perspective here, guys, just to show you how there's this kind of general shift across different cities in the U.S. and just how diverse the different, I guess, kind of the status of the economy is for different cities. You can see here in Nashville that you're getting 28% less space, 20% smaller homes than just 5 years ago for the same $1 million price. So we're seeing people want to live closer in cities in the United States. We're seeing, I think, a big move away from the suburbs. This is a really interesting change, from what we saw about a decade or two ago because of job security, but also being in the city, right? This is a thing. You got a whole youthful audience of individuals who are probably at the age where they're either starting to have their family or they're deciding to opt out of having a family, which I think is kind of upsetting. I want to have a family one day. But the fact of the matter is that, a lot of people are opting in for the city life in this case. And there's a lot of new smaller cities budding up, and they're all going into building these huge property bubbles in this case. Not to mention, it didn't help over the last decade when you had China buying up every single property in the city. Where I think I've told this story before, guys, but I'll mention it just for those of you who may have not heard it. I remember I had friends up in Boston who had basically, for example, had individuals come up, move to the state, move to Massachusetts, and they basically want to buy a property in the city of Boston. And when they go through and call up the property dealer and say, hey, I'd like to buy this home, 24 hours later they leave a voicemail or leave an email. 24 hours later they say, sorry, the property's bought up, and it was a Chinese investor who bought it, because they'll pay the premium if they know someone's going to buy it. They're like, oh no, I'll pay 100 grand on top of that 900,000 or $1 million property. And that's been leading to this inevitable bubble where prices just keep going up, because it's almost like a government subsidizing it. There's always going to be a buyer in that case, because there's so much money flowing out of the country, right? So I'm not speaking bad about China. It's propped up a big asset bubble. The problem is that regulators haven't done anything to make sure that housing prices don't go too high, so average everyday people who live in the country can actually buy it, right? So anyways, very interesting phenomena. Alrighty, everyone. So let's go ahead and dive into this topic of dominance in the electric vehicle market. And I know this is going to be what might seem as a controversial topic, because some people don't support EVs. And honestly, guys, that's fine. But I think a lot of the criticism that is brought upon Tesla as a company specifically is a little bit overbearing sometimes, and a little bit rooted in personal bias rather than facts and fundamentals, right? I hear a lot of people mention kind of generic things like, oh, Tesla, for example, wouldn't have survived without the EV credits. And that's sort of true in a sense. It's what's helped them be able to produce an electric vehicle at a standard price of sedans. But the thing is, every single company in the United States, companies with tens of billions more in cash and resources and engineering talent, could have done this same exact thing that Tesla's done since these laws were in place, and they didn't do it. Tesla was really the first one to make a mainstream, digestible form of an electric vehicle that people could actually use, that people actually wanted to use. And outside of that as well, there's the issue of like, oh, when an electric vehicle's made, when it goes through the plant, there's emissions. It's like, well, yeah, that's with every single car, right? It's like, it's actually kind of funny is the Gigafactory actually has a lot of solar power. So they actually are trying to fuel as much renewable energy into the factory where they're manufactured to, I guess, kind of kill that stigma and argument. But anyways, I know there's a lot of people who either like or dislike EVs. I'm not here to really argue that. The fact of the matter is, whether you like them or you dislike them, EVs are here to stay. It is the growing auto market of the next century, right? In the 21st century, we are going to see EVs dominate the world. It's not going to happen overnight, but it's going to happen over a multitude of decades, as cars are not something to make a switch to easy overnight, right? They're big ticket purchases. But we have a good question here. Is Tesla going to maintain its dominance? Well, there's a lot of things going for Tesla, and I'll mention these, and we'll take a look at the pros and cons of Tesla. Tesla has a lot of pros to it. Tesla not only makes very desirable vehicles, with that it has the brand recognition that people want to buy a Tesla because it's a Tesla and what it stands for, right? There's the mission behind it. You don't get that when you buy a Nissan Leaf, right? You don't feel that same sense of pride that you get with a Tesla, and that's very important for consumer choice. Not to mention as well, they have a lot of strategic dominance. They have grown into a variety of global markets, from the United States to China to Hong Kong to European markets to London and the UK in general. You not only have that market dominance and this spread across the world where they've become a global auto manufacturer, but along with this, their biggest benefit, I would say, is the charging stations. They have basically built the equivalent of the gas stations that fuel standard gasoline cars for electric vehicles. So for those of you who may not know, when you go and you plug in a Tesla at these charging stations, right, they're basically charging stations for Teslas. And usually when you buy a new car, you actually get a bunch of free credits where you can actually fill up on your next few charges for free, using up those credits. But it's actually not that expensive as well overall to actually go and charge there. It's quite cheap. And it's very convenient in the time sense, whereas if you were to plug it home, it would take a while. You can still do that if you want, but the cool thing is that the charging stations allow you to do it almost as quick as you would filling up a gasoline car. So that is going to be one of the biggest beneficiary elements to Tesla lasting long term. And it'll be interesting to see if it can hold that strategic dominance. I'm not 100% confident. I'd say the biggest fear I have about Tesla, and this is not at the fault of Elon, it's not at the fault of, I would say, the company, because they're really trying to do something pretty big with a limited amount of resources, and that is to provide an electric vehicle to the masses, in this case, going from their high expense electric vehicle, which was the Roadster back a few years ago, which was low volume and high price, all the way down to a low cost, high volume sedan. And they've been able to do that. But it seems as if every single time they're getting to a point of confidence when they're finally starting to make some money, they've been getting to a point where they're still trying to continue to expand, in the electric vehicle market, similar to how Amazon has just gone into pretty much every market it can. And they've been always thin on cash at one point or another. Again, this is not a criticism towards the company, but the issue as I see that is that they're not only continuing to dilute their stock as they have, and this is why you have this pattern here in the stock. The stock would be much higher if it wouldn't have diluted its shares and was able to find another way to get cash. But along with that, they've been doing things like using pre-order money for some of their vehicles in order to fuel the development of their current vehicles. So an equivalent of this would be like using the money for their new truck that they announced and using that to produce Model 3s, right? And things like this are a little bit concerning to me. I don't think it's not illegal by any means, but at the same time, it's the issue with it, from what I see, is that it shows that they have still not been able to get into a position where they're going to be cash strong, where they have to continue diluting equity of the company. And honestly, if Elon and some of the major investors want to do that, that's fine. But you as a shareholder are going to be liable to that in that case. You're going to see a dilution of your ownership as a percentage of the company when they do these new issuance of shares, right? And that's with any company, right? It's the same with a startup in that case. So if you believe that Tesla is going to be the major company and that this is a necessity in order for it to fuel forward, then it's not a big deal. But it is definitely, again, something that you have to keep in mind as a shareholder, as well as the fact, just in the sense of the solvency of the company and the sense of its financial well-being, seeing that it's having to use pre-order money to keep going. So that's something that concerns me a little bit as well. To be completely fair and critical, Tesla is not a perfect company, but I highly admire the vision of it. You can see that they were able to do something that no auto manufacturer was able to do over the last decade. And this is, yes, where I have a little bit of an opinion on it. I love seeing American-built auto manufacturing companies. I like seeing things that are pushing forward towards something that, again, I think we all want a cleaner environment overall, but more importantly, an EV in a more selfish nature is a really awesome car. If you've ever gotten to drive an EV, it's pretty cool. The acceleration you can get on it, the luxury kind of experience that Tesla's been able to provide at a relatively affordable price is pretty darn cool. I have to give them credit on that. And the fact of the matter is, as I mentioned, I might have alluded to earlier on, any company out there could have used these EV benefits, these tax credits, to their advantage. But they didn't over the last decade. In fact, back in 2008, they had to get bailed out. And a variety of these companies who were supposed to pay back on their loans have not. About $9.3 billion was expected to be lost from the program. And they've also ranged, well, this is actually still ongoing in this case, but it was expected to be that 9.4 to 14 billion hasn't gone back to paying these bailouts. And bear in mind, these are the General Motors of the world, the Fords, the major auto manufacturers in the United States. And funny enough, during the same period of time where they haven't been able to pay back all of their loans and have continued to not really experiment in electric vehicles, we have $14 billion in buybacks from GM as they're continuing to shut down plants here in the United States. We have Ford back in 2014, $1.8 billion in share buybacks, right? So this is what I hate, right? You see just such an attack on companies like Tesla who benefit from a little bit of tax credits. But the fact of the matter is, the automotive sector has not been working in the interest of U.S. citizens over the last few decades. They've moved plants overseas. They've automated extensively and have laid off mass amounts of employees. And we're now seeing a U.S. company doing something pretty damn innovative, and they're doing a pretty damn good job at selling cars across the globe. So I don't know. You guys can let me know if I'm being biased. Let me know if I'm wrong in any regards. I'm happy to hear from you guys. And again, I think you can sense by the way presented. I love to, hear different points of views and everything. But the fact of the matter is I stand pretty vigilant in this because I used to not be a big fan of especially hybrids. Like hybrids and EVs in general seemed impractical back a few years ago. But to me now, I think we're finally getting to the point where, at least in Western markets, in the United States and Canada and Europe, and also in the developing middle and upper class in China, there is a need for electric vehicles. and there is a desire for electric vehicles. So it'll be interesting to see how it works. But I've rambled on enough for today, guys. In the next video, I think we've got a lot of interesting things coming up over the next few weeks, guys, when crypto markets hopefully start to turn up. We're going to be continue to keep an eye on equities and other forms of traditional markets and commodities, on gold and silver. But if you guys have anything you'd like to see me talk about here on the channel, leave a comment down below, and I'd be happy to get to it whenever I get the chance. All right, guys. Hope you all are doing well, and I'll see you all in the next video. Stay tuned.